Yeah, morning, Tracer. We are looking for a bright and breezy start to the Asian markets today. Certainly the Hang Seng and Chinese equity markets looking pretty positive at this stage. We're calling up the Hang Seng nearly 3%. ASX should see a modest open of about 30 basis points higher, and the Nikkei, we're calling that up about 50 basis points at the moment. But Xi Jinping's visit to the PBOC, they're classifying as unprecedented, but we've got confirmation now that they're targeting a government deficit of 3.8% of GDP. That's going to mean about $137 billion worth of sovereign debt will be issued during the Q4. These were numbers that were sort of touted last week, but now we've got confirmation of that situation. Whether we get those full numbers is obviously yet to be seen, but the market seems to have taken that this new spending, effectively, these issuance to fund disaster relief and also infrastructure should support the economics going forward. Whether the Hang Seng can push up to 18,000 is something we've been watching. It wouldn't surprise if the PBOC push liquidity into the markets today, but we'll see how Asia trades that positive open, where we see follow through buying on the get-go there. In terms of what we've been seeing in terms of news, the European PMI numbers were pretty woeful, to be honest. We saw the service numbers at 47.8, manufacturing at 43, so fairly recessionary conditions playing through there. And we also saw the ECB's quarterly lending survey coming through, which showed demand for loans falling again. So pretty poor situation playing through there. UK PMI's services 49.2, slightly below expectations, but certainly better than what we're seeing in Europe, and also 45.3 on the manufacturing. It was in the US where we saw the outperformance. Once again, that exceptional story really hitting home with reasonable expansion in services and small expansion in manufacturing playing through. The wash up in terms of market reactions in gilts, we saw yields across the curve sort of 4 to 6 basis points lower. In Germany, certainly towards the sort of 5 and 10 year duration, we saw yields down sort of 6 and 5 basis points respectively. Italy down about 1 basis point or so. So good buying play, a little bit buying playing through in both markets there. In the US, what we can see is actually at the front end, we've seen sellers, 2-year treasuries are up 5 basis points at the moment. A little bit of buying towards the back end of the curve. Now, obviously, that data resonating, but we also saw a reasonably poor 2-year bond auction, about $51 billion of 2-year notes being issued. The bid to cover falling a little bit there. In terms of FX markets, though, we have seen that dollar really working quite well. The dollar index is pushing nicely higher. The Aussie is the best performing currency. It had a bit of a pop after we saw Governor Bullock's testimony, essentially. And I think also the fact that we saw Chinese assets working well. We've seen Dalian iron ore futures up 3.4% and copper also at 1.3%. That seems to have given it tailwinds, but as that session wore out, as you can see on the intraday chart of the Aussie dollar, it sort of just fizzled out a little bit. But you can see here that the US dollar has gained quite nicely, really, against all G10 currencies, bar the Aussie dollar on a net change basis, certainly against the Swedish krona. You can see some good gains playing through there as well. In terms of what we've been seeing in equity markets, well, a pretty whippy session playing through. We sort of pulled away back down to the flatline mid-session S&P, and then there's been a nice melt up into the close. And you can see the net change in the cash sessions across the various bourses have been very positive indeed. I think interesting after market, though, we've been very focused on Microsoft earnings. They've come out with very good earnings relative to expectations. Cloud seems to have beaten quite nicely. And you can see the stock, as I speak at the moment, about 5-6% higher. Google, not so much. They seem to have missed on the cloud side of things. And the stock, as I say, at the moment is down about 4%. Where you've seen a big move is in Snap. So put that on the radar, because that stock's up about 24% at the moment. Commodity markets, you're seeing crude kick down about 2% or so. So a few sellers playing there. Gold's holding up pretty well. It's pretty much unchanged. As I say, copper has had a good gain given what we're seeing in China at the moment. And Bitcoin has come off the highs of the day. But you can see here still looking pretty good at the moment. Looking ahead, it's really going to be about Aussie CPI. That's going to be the big one that comes out later in the Asian session. The market's looking for headline at 5.3 and core at 5%. Quarter on quarter, that trim mean number expected at 1% there. Now, bear in mind that the RBA are looking for headline inflation to be at 4.5% by the end of the year, 4% on trim mean. So if we get a big number relative to expectations, the RBA could easily be looking to upgrade their inflation forecasts and their statement of monetary projections, monetary policy on the 10th of November, something we are watching very closely. And as it stands at the moment, the market is pricing 9 basis points of hikes for the next RBA meeting, and then about 12 basis points or so for the December meeting. So a big number here could see that November meeting being a live one. So an interesting one. Watch out for Aussie dollar traders there.